Shares in Swiss bank UBS surged as much as 7% Tuesday morning. That after the country's biggest lender reported its best annual earnings since the global financial crisis. Net profit for 2021 jumped 14% to $7.5 billion. The bank put that down to deal-making and robust trading activity by its ultra-wealthy clients. The numbers beat forecasts and marked its best year since 2006. UBS says it now plans to hike dividends and do a $5 billion share buyback. The bank also set out its first major strategic review since CEO Ralph Hamers took the helm in November 2020. It aims to bring costs down and use technology to reach more customers. UBS wants to expand beyond its core base of billionaires and multi-millionaires. Last week it agreed to buy US digital wealth management firm Wealthfront as part of moves to target younger, tech-savvy investors.
UPS on Tuesday projected 2022 revenue above market expectations as it posted record annual earnings. UPS stock jumped 16% to a record high of nearly $234 a share, as the company capped 2021 with double-digit revenue growth on the back of a continued surge in online shopping and labor shortages. Under CEO Carol Tomé, who took charge in June 2020 as the health crisis raged, the logistics giant adopted a, quote, better, not bigger strategy. It prioritized lucrative deliveries over volume and courted customers generating more revenue and profits, such as healthcare companies and small and medium-sized businesses, or SMBs. Business with Amazon.com, its largest customer, also notched a healthy jump. The e-commerce behemoth's contribution to UPS's total revenue rose to 11.7% in 2021, even as concerns lingered over Amazon's development of its own logistics network. Much like other industries, UPS and rival FedEx Corp have been grappling with supply chain challenges and rising Omicron cases among their staff. Still, it forecast a 2022 revenue of about $102 billion, above analyst estimates.
It's the word game that went viral around the world. Now Wordle is being acquired by the New York Times. The deal is said to be worth a low seven-figure sum, and the news sparked a furious online reaction. Fans noticed that the NYT only promised to keep Wordle free initially. Some took that as a sign it could one day disappear behind a paywall. Wordle was originally released back in October by former Reddit software engineer Josh Wardle. Players get 6 chances to figure out a 5-letter word in as few goes as possible. Wardle says he's agreed the sale after his creation's success became too much for one person to handle. Now the New York Times is adding it to its stable of games and puzzles. It's trying to broaden its digital content offering with a view to hitting 10 million subscribers by 2025. Tesla is recalling almost 54,000 US vehicles which it fears may fail to obey stop signs. The recall affects some cars fitted with its full self-driving software. There's concern they may not stop properly at some intersections, posing a safety risk. The move covers specified Model 3, S, X and Y vehicles. Tesla introduced the so-called rolling stop function in October, allowing vehicles to avoid a full stop at quiet junctions. That appeared to violate state laws requiring a complete halt at intersections. Tesla will now do an over-the-air update to tackle the problem. It's been testing an improved version of its self-driving software on public roads. Despite the name, it doesn't offer fully autonomous driving. Back in November, it recalled almost 12,000 vehicles over a communication error that could cause unexpected emergency braking.
Stocks finished higher for a third straight day after another choppy session on Tuesday, as trading reflected investor uncertainty about how to play the current market following a historically volatile January. All 3 of the major indexes started the first day of February in negative territory but bounced back. The Dow rose about 0.75%. The S&P and Nasdaq rose about the same following their largest 2-day gain since April 2020. Michael Vogelzang, the chief investment officer at Cap Trust, says he expects more choppy trading in 2022.
The last 3 years, we've seen a return of 26 or 27% in the S&P 500. per year, almost a 90% return in the last 3 years in the middle of a pandemic. We think that's above average for sure, and we expect that to return to normal. We've seen that already in January with lower prices, more volatility, and frankly, acting a little bit more like a stock market should act.
The energy index remains by far the best performer of the major S&P sectors this year, as U.S. crude hovers near a 7-year high. The strong energy prices helped ExxonMobil post its biggest quarterly profit in 7 years. Shares jumped nearly 6.5% as a result. UPS was an even bigger winner, with shares finishing up 14% after the company projected this year's revenue above market expectations. Shares of AT&T fell more than 4% after the company said it will spin off Warner Media in a $43 billion transaction to merge its media properties with Discovery and also cut its dividend by nearly half. Google parent Alphabet ended higher before posting earnings after the bell. The search giant reported higher than expected fourth quarter sales as internet advertising, cloud computing, and its hardware businesses benefited over the holiday season from the growing surge in online shopping. Shares climbed higher in after-hours trading.